Hey guys, welcome back to Reserved Investments on YouTube. You know, a lot of you guys, you need to go back and you need to watch some of my earlier videos because I keep getting questions on a lot of the core talking points or concepts that I covered previously. Now, to be fair, I don't know if a lot of you guys are maybe thinking that maybe my perspective changed, so you want me to see me do an updated video or a Q&A session on a lot of some of these earlier concepts that I introduced on this channel. But I will tell you, for the most part, my particular talking points that I presented 2 years ago on this channel are still relevant today, almost 3 years later. So I just want to make that very clear. I am getting a lot of questions on fractional share investing in the antiques and collectibles trade. Now, if you don't know what that is, if you've ever heard of companies like Yield Street, if you ever heard of companies like Masterworks or even Rally, a lot of those companies are fractional share companies that are operating in the antiques and collectibles trade. So what is the core concept of a fractional share company? What they do is they will go to the market and they will buy something like an Incredible Hulk 181 graded by CGC in 9.8 condition, or they'll buy a very rare video game or a piece of artwork or a high-end coin. And what they'll do is they'll take that particular item, and much like they do on Wall Street with shares of stock, they will pretty much break it apart and they will sell fractional shares of ownership in that particular collectible asset. So if you have something like a rare painting or a rare coin, pretty much rather than having to go to market and buy or invest in that full amount of that item, let's say that the item's valued at $250,000, you now can pretty much choose to buy just a share or a piece of that particular item without risking $250,000 to buy that particular item and own it. That's what fractional share investing does. Now, on the surface, that sounds like a really cool idea. Hey, Sean, this is great. I don't have $80,000 to spend on this particular comic book. Or maybe, Sean, I don't want to risk $80,000 on that particular comic book. I can buy just a couple of shares and I can say, hey, I own a piece of that Incredible Hulk 181 or that piece of Action Comics 1, whatever particular item we are talking about in question. Now, the problem is this is a lot more risky than what it sounds. For one thing, when we look at the antiques and collectibles trade, the antiques and collectibles trade is by its nature illiquid. And I spend a lot of my time dealing with Timmies, Kimmies, and Poindexters that come into the comment section or that send me angry emails telling me, Sean, you don't know what you're talking about. I have a very rare comic book. I have a very rare coin. I have a very rare video game. I have a very rare collectible card game, whatever it is. If I went to the market right now, I could turn it into cash almost immediately. And my response to that is, if you want to get full market value, most likely you could not. This is why when you guys come to me and you go, hey, I'm thinking of consigning this collection to X auction company. I need to know the ins and outs. How should I go about contacting this company? And what's the turnaround time? One of the things that always causes most amazement through a lot of the people that utilize my consulting services is when I tell them, okay, it's going to take you anywhere from 3 months to 1 year to get paid. And people come to me and they go, they can't believe it. They have all these comic books or all these rare coins or all these rare video games or all these rare action figures that are all third-party graded and they're all in demand. Why does it take that long to get paid? Well, because you got to understand the auction company, once they get that collection, they pretty much have to photograph it. They have to put together an auction catalog. They have to take the time to promote those items so that the high profile investors like me, or maybe even other collectors and speculators, if they want to bid on those items, they know that, hey, in the next 2 months, there's going to be a signature comic auction that Heritage is hosting, or Comic Link is going to be doing an auction, or Morphe's auction just got this incredible toy collection that they're promoting. There has to be a chance for the average collector, investor, speculator, or the person that is interested in those items to see them and know, okay, I got to set my calendar for that auction date. And if needed, I can go in, I can look at what items they have, and I can ask questions before the auction goes off so I have all my questions answered so I'm not left wondering, well, hey, is that case cracked on that item? Hey, Was that item resubmitted for grading? What's the issue with this coin over here? It looks a little bit, I'm looking at it in this light level and it's not doing it for me. Maybe I need to see more pictures of that particular item. That's why auction companies have lead times for a lot of their sales, guys. Also, you need to understand a person that's spending $250,000 or even just $100,000 on a particular item, most of those people are not just wandering around in everyday America or an everyday world. Most of those people are pretty much specialty collectors. They're people that have the means to buy those particular items. As such, if you want to sell to them, you have to give them an opening. You have to give them leadway, meaning they're going to want to take time to know, oh, okay, this is coming up for bid. This is great. This is something that I've been looking for. I'm really excited for this. They have to have the time to know that, hey, in 2 months, this particular coin is going to be offered through Long Beach. And it just so happens that either Stacks and Bowers or Heritage Auctions is going to be the auctioneer. So if you want to bid on that rare coin, guess what? You're going to have to wait 2 months. And it kind of builds excitement for that particular item. That's why items in auction have the potential to really accelerate in value, and they can pretty much gain a historic price. That's why we call them record-breaking sales when that happens. Now, another thing you got to understand. When a lot of companies do this, meaning Yield Street, Masterworks, Rally, any of these other companies, and I'm not mentioning them all. I'm just mentioning a couple of them that I happen to know. When a company does this, there is a management fee that they charge for you to be able to buy a fractional share of ownership in that particular collectible item. Now, this is something that we have to talk about because this falls right in line with what I've been arguing with some of you when we talk about investing in Wall Street, when we talk about investing in financial assets. Every time I bring up investing in a mutual fund or investing in an index fund like the Vanguard S&P 500 index fund, some Timmy, Kimmy, or Poindexter will come in the comment section and say, Sean, I have to pay a management fee to invest in any of these index funds, any of these mutual funds that you recommend. Why should I have to give Wall Street my hard-earned money? Now, I want to put this in perspective for you. Let's say that you're like me. You have hundreds of thousands of dollars to invest in a lot of these mutual funds. You have your money invested in a lot of these mutual funds. Are you aware that Vanguard only charges a 0.03% expense ratio for its popular Vanguard 500 index fund, meaning that mirrors the S&P 500. Now, are you aware a 0.03% expense ratio translates to $3 per year for every $10,000 you have invested? So if you are someone of means who has $100,000 invested in an S&P 500 index fund, you are paying $30 per year for that privilege. Are you really going to tell me that you can pretty much mirror an S&P 500 index fund by opening up a brokerage account and buying all the stocks in that particular S&P 500 index, correlating it back to each appropriate amount congruent to your investment ratio for under $30 per year? Even if you had $100,000, that's pretty much the expense ratio. Now, why is this important? Because this is what cracks me up. I have people that are coming to me telling me, Sean, Wall Street's not it anymore. I don't want to invest in Wall Street. I don't want to own financial assets. I'm going all in on cryptocurrency, collectibles, and they'll bring up, I'm going to invest with Masterworks. I'm going to invest in Yield Street. I'm going to invest with Rally Road as a way to diversify from my own holdings in antiques and collectibles. And I'll sit there and I'll mention to them, okay, little Timmy, what's the expense ratio that a company like Yield Street, Masterworks, or Rally is going to charge you to own one single share? Or you can invest probably in 100 different shares in a lot of these different collectible markets. What's the management fee? Are you aware the management fee in some of these companies is 2.5 to 3%. Now let's go back and let's use this to compare it to the S&P 500 index fund. Somebody has $100,000 invested in an S&P 500 index fund, and it's through Vanguard, and it's 0.03%. They're paying $30 per year. That's it for that $100,000 to sit there at Vanguard. If you go and you invest $100,000 with some of these companies, and I would not recommend this at all, you're going to pay a management fee of 2.5 to 3%. Now, do you want to do the math? Do you know how much that is? That's $2,500 to $3,000 per $100,000 you have invested. Do you see the difference? And make no mistake, because you're investing in a collectible asset, there's more risk in investing in that rare comic book, that rare coin, that rare piece of artwork. Hell, even those Air Jordans that you wanted as a kid that are now selling for a record sum, if you invest in that particular market, you are taking a bigger risk than investing in the financial markets and paying Vanguard or Charles Schwab or Fidelity, T. Rowe Price, take your pick, that whole $30 per year for that $100,000 that you have sitting in an S&P 500 index fund. Now, to be fair, I just used Vanguard's expense ratio on that. I have no idea what Charles Schwab or Fidelity or T. Rowe Price charge for their corresponding index funds that are based on the S&P 500 index. You can pretty much research that yourself. But I'm just stating, do you understand how stupid it is that some of you come to me and argue that I'm going to put all my money in antiques and collectibles? I'm going to put all my money in a lot of these alternate fractional share companies that cater to these markets. Please do your research. Now, to be fair, we're almost 12 minutes into this video. I do want to answer a legitimate question that I've been asked. Sean, in your opinion, is there anybody that should be using these fractional share companies? If you are someone who is already financially established, you have money in mutual funds, ETFs, stocks, bonds, real estate, you have no student loan debt, you have no credit card debt, you already have exposure to antiques and collectibles, maybe other alternate asset classes, and you say, you know what, I want to take $1,000 and I want to just have fun investing in Masterworks or Rally or Yield Street. I don't really care that they're going to charge me 2.5, 3% in certain instances. I don't care that this is a truly a liquid asset. I just want to have some fun with this. By all means, you do you. But should this be seen as a legitimate investment opportunity in the year 2022? In all honesty, no offense to these companies, in my opinion, no, not at this point. In my opinion, we have a long way to go before someone like me, somebody who's educated in both the antiques and collectibles trade and also business, economics, and finance, can recommend to any of my clients, to anybody else that wants my advice, that they should be using companies like this and investing in fractional share ownership as it applies to the antiques and collectibles trade. We're probably 10 to 20 years off to even see if this concept is proven. So let me know your thoughts in the comment section below. If anything that I said in this video confused you, please let me know so I can break it down for you. Maybe even if I have to do a follow-up video. On the other end of the spectrum, if you already knew this, let me know that in the comment section below. That way, going forward, I won't take my time to do videos like this. Thanks for watching, and have a great night.